That's anyway. Let me just do a quick recap, right? So based on the previous calls, right, where we explained transactional liquidity, I said transactional liquidity is the previous I that was taken out, right? The previous I, then the previous I be taken out now. Right now, you're already anticipating a correction, right? Not you're anticipating a correction. However, you can't just determine the transactional liquidity. You can't just assume that this I now is not transactional liquidity until this I gets taken out, right? That's what you can now say, okay, this I is my transactional liquidity, right? So now, looking at this now, you're able to understand that from this low to this I is your swing structure. Now, since you're already anticipating a correction now after price took out this I now, you're already anticipating a reversal or a correction. Where's the low that you want to be taking out? From this swing now, where is your structural liquidity? This low here, right? Is the last low before this low here. So now you're already anticipating price towards correct, correct. Take out the structural liquidity, then boom. Right. So that's about transactional liquidity and structural liquidity. Now let's move to inducement liquidity. Inducement liquidity, this is it now. So remember when I said to actually determine your swing structure, you must see something like this: a sweep, right? Then the break, right? So now looking at this now, you know that this is a sweep, right? It must always sweep something, right? That's the previous low, the previous high, right? So now in this case now we have traditional liquidity being taken out, transactional liquidity. But then you don't have a B, you don't have structural liquidity in this swing structure now. This low here is an inducement. Please take note of this. This low here is an inducement. As a matter of fact, every highs and every lows, they are all inducement, right? But now, pay close attention to this. Now, remember I said if price takes out a low like this, if price sweeps the previous low, we expect this low to be protected, correct? However, in a situation like this where you have only A to B, right? You have only structural liquidity, you have just a swing structure here, then that means you have only A to C, right? Based on structure, right? You have only A to C, there is no structural liquidity here. Your mind should be telling you originally you should just expect this low to be taken out. This low is an inducement. Why? Because there is no structural liquidity here. So you're already anticipating this inducement to be taken out. And once, what does inducement liquidity do? Chorus answer, you expect expansions. Inducement liquidity are used for expansions, right? Expansion. That's what inducement liquidity is used for. Just like traditional liquidity is for correction, structural liquidity is used for continuation, but inducement liquidity is used for expansions, right? Expansion. Immediately price takes out inducement liquidity, price just moves up, right? So that means, for instance, now let's say we have everything in on one swing structure. You have a sweep, a break, you have this, then you have this break as well. So that means that you have first thing you want to look out for is what? A sweep, this I, transactional liquidity. Remember, price already broke the structure, right? Price already took out this I before we considered it a transactional liquidity. Now, note, in a situation like this, where you have something like this I is an inducement first. Before price takes it out, it is an inducement. After price takes it out, it becomes a transactional liquidity. So now this is, so now we have a very nice swing structure here, right? You have a very nice swing structure here. So what are you expecting price to do here? First thing is this is an inducement. This is also an inducement, right? So that and what are you expecting price to do? You're looking out for your structural liquidity, right? So that means you expect price to what? Corrections to take out structural liquidity, then continuations. But in a scenario like this where there is no structural liquidity, you expect this to happen. Always have it at the back of your mind that whenever you don't have structural liquidity within a swing structure, the inducements will be taken out. That is the low or the high that you expect to be protected will always be taken out. Please pay close attention to that, right? You can go back to your chart and back test it, right? And basically, that's all about inducements that I will be willing to share with you guys, right? It's just as simple as that. It's very simple. How to easily spot inducement is just very simple. First in price sweeps, right? You have this, right? But if there is no structural liquidity, if this leg is just too straight, just always anticipate this to happen. Then boom. It happened on Euro USD the past week. Let me show you guys that example. Now this is a perfect example of this is it. Now you can see what price did here. Price swept liquidity. The previous low was swept. What happened? This is an inducement, right? What happened? Boom. What was this called? Expansions. You see this quick run up there. That's called an expansion. Now we have a sweep, then we have a break, right? We have a sweep, then we have a break. So now everyone will basically want to, say they want to buy from here because they expect this low to be protected, right? But you can see what price did here because there was no structural liquidity. Can you see any structural liquidity here? Mind you, I said this earlier, right? Your structural liquidity must be a V shape. If it's buying, you want to see this obvious V shape here. If it's selling, you want to see it must be obvious. It must be obvious. It must be really, really obvious. Take note of that. But now you can see this is just a straight leg. So what do you expect to happen in your mind? You already know that this inducement liquidity will be taken out because this is just a straight leg, right? So in your mind, you already expect this inducement liquidity to be taken out. Then after inducement liquidity has been taken out, what are you expecting? Or is that what are you already anticipating? You're already anticipating a what? An expansion. Now, guys, before this sweep happened, I let me share it to the group. You guys can go to the group right now, the general chats, and look at it, right? Before this sweep happened, I already anticipated it. Matter of fact, I did take a loss here, trying to just long to this zone, right? After price took out this low here, and whether it's a long here, but immediately price took me out. This was the next low that I expected price to take out. While I saw a lot of people marking out their other blocks here, I expected this low being taken. So let me just share it. Check the general group right now. I'll check it together. I'll send it there now. I'll share it with all of us. Right. So I had this, and this was it yesterday? 2 days ago? Yeah, 2 days ago. And in the morning immediately price took out the liquidity. I saw that buy. I just sent to the group now. So let's go back to the general group and take a look at it. Right. So you can see I tried to long here. Immediately price took out this inducement liquidity. I tried to long here, but I wasn't tagged immediately. Right. If you actually look closely, I wasn't tagged. Don't know if I can zoom this, but I wasn't tagged immediately, right? So price hit my 3 hour target, right? Then did what eventually? It came back, took out, then eventually took me out, but I actually didn't take out I didn't delete the order, which I supposed to have done. But then, middle price took it out. You can see where I expected price taking out, right? This inducement low here, because it's just a straight leg. because it's just a straight leg. Now, I actually have a reason why I expected this low to be taken out. There was no structural liquidity here. So originally, I was just expecting this low to be taken out. Then we have our expansion, right? And you can see why did I actually have this high as my target? Because that was a structural liquidity. But you can see this was on the 5th. On the 5th was supposed to be 2 days ago. So yeah, supposed to be 2 days ago yesterday. That's sure. Right, yesterday morning, exactly yesterday. So I expected this happened 2 days ago. So then I expected this low to be taken out. Then we have buys. Then you can see what happened. Immediately price took out that low. We had this. We had the expansion. I believe most of us understand what expansion means, right? The basic meaning of expansion. Then you can see it. Now, if you check a current price action, let's look at the current price action of Euro USD on Euro USD. You can see how price bought up. You can see at our target, my initial overall target has almost been taken out now, which is what? My structural liquidity. Why? Because we have this, we have a sweep, we have a break. So that makes this guy our A, right? From this guy to this guy becomes our swing structure. So now, if you're actually going to sell now, where is expected to be our structural liquidity? Where is the last high? Obviously, this guy. This guy is the last high. That's our structural liquidity. So while people were marking out all these ones as they're wasting their time and just wasting chat box, whatever. Saying this is what's it called? People are calling it trend line liquidity, blah 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 blah. But you are already saying one line. You are saying only one line here. You're just marking out one line because you expected that high. You have reasons why you expect this high to be taken out because it's just a structural liquidity. You can see this. You have it's just very simple. A sweep, a break. You have this again. You have this again. Very lovely setup. Very, very lovely stuff. So now you were there expecting this high to be taken out. So whatever happens here, you're not bothered, right? Whatever happens within here, you're not bothered at all, right? What you're actually waiting for is for price to just take out this guy, then you can now continue the sales. I hope you're actually understanding this, right? So you can see because there was no structural liquidity here. Now, if there was structural liquidity here, this inducement low wouldn't have been taken out. But because there wasn't structural liquidity here, this is just a straight leg. You can see how price took out the inducement low, right? And what happened immediately? Expansion. Now, this particular buy now, let me tell you guys a secret. Me being your coach, I can actually tell you for free that I actually took a loss here. Let me show you guys. Originally, what did I actually show you guys? Originally, what we're supposed to do? We're supposed to look out for the last low before the main low, right? With structural liquidity. First thing is we had a sweep, correct? We had a sweep. Let me cut price back to the zone. Right. And now we were actually expecting buys to take out this structural liquidity, correct? So then we're looking for buys originally. But then I saw these. Number one, please take note and learn from my own mistake, right? I think I was using my phone or something, right? So I saw these. First thing is there is no sweep. There is no sweep here. But then I understood that this was a sweep. This is where the swing actually started from. But tell me why I was trying to buy from here instead. Let's use a 30-minute time frame. Now, because I saw this low here, I wanted to take, was it a 15-minute time frame I used? Yeah. Because this 30 minutes or 20 minutes or whatever time frame it was. Right. So because I saw this low here and this low, I said, okay, what if I just take a buy here instead? Ignoring the fact that that is not the last low, right? This is why after this session, please, after this whole bootcamp, I want you to draft out a plan, stick to it, and never ever go against it, right? The last low is what you should always aim for. In a swing structure, the last low. You can see this low here is actually a low. This is an inducement. This low is obviously an inducement, right? But then this is the last low here, the obvious last low we can see here, right? That was an obvious last low we could see there. And that was exactly where my entry is supposed to be. either this last low, or we have this inefficient price action. You can either choose to use 50% of this, or the last low would have just been the entry. 10 pip stop, and the overall target, which is structural liquidity here. The structural liquidity, which is this guy. The structural liquidity would have been the overall target, right? But you know, this is actually liquidity as well. This is the last low. From this swing, you have this sweep, right? So from this high here to this low, we can see we have an structural liquidity here. So not be greedy. You just say this to be your overall target, right? And then whatever it is you want to trade, whatever area it is, you can start to scale up or just take partials or whatever it is. But however, this is what you should be expecting, the last low, especially on Euro USD, right? And then this would have been the trade. You can see that. You can see that, right? The last low always. However, today's class is on inducement liquidity. So now we did explain the reasons why you should always anticipate the inducement to be taken out, right? The low to be taken out, or the highs. I've given you guys a reason why you should always anticipate it. Whenever there is no structural liquidity, just anticipate that low to be taken out. Out of 10 times, price always take out the inducement liquidity at least 8 to 6 times. And you don't want to be the inducement. Most times, if I actually lend, I've taken a lot of losses, right? Now, the basic market structure what you tell us to do what? After we see a break, you tell us to just buy from here, right? But the advanced coupled with inducement, coupled with liquidity rather, will tell us to do what? Wait for a sweep, a break. You can see this something like this, right? A break, then we now anticipate. We expect this low to be taken out, right? Then we have price. What after price takes out this high? What are you already anticipating? A correction to take out structural liquidity. Then we have a continuation. That's basically how you apply everything together: transactional, structural, and inducement. Mind you, price is still liable to take out the inducement again and move. But out of 10 times, whenever you have a structural liquidity, price will just take out structural liquidity. Out of 10 times, at least 8 times, you should be correct, right? And then price is very, very fractal. The same thing happens on the lower time frames, trust me. Like the same thing happens on the lower time frames. I can see a continuation from this trade. This particular buy, I can see a continuation. Let me show you guys. Let me show you. Let me show you. Matter of fact, right? We have a sweep of this low, right? We have price take out this high. Where is the last low? Where is the obvious last low here? This guy. You can see our price bought. Now that being said again, if you look closely again, let's look at the 5-minute time frame. I hope you guys are seeing this, right? Now again, we have a sweep, right? We have price take out this high. We have price take out this high again. Now, where is the last low? This guy here. This would have been a perfect, and this is inducement, right? You see another boom, another buy. All the time. It happens all the time. All the damn time. Matter of fact, today, the thing is, you can trade on lower time frame. Today, I took a shot here. This particular shot, I took it. Now, look at this. What do we have here? A sweep, correct? We have a break. Now, this is our inducement. Where's our last eye? This eye, correct? Can you see that? I took this particular shot today. Let me send this screenshot to the group. Where was it? So, for those of you that just want to, scalp, those of you that could be scalping and all that, this is a perfect thing for you. Just the only thing is you should always know when to leave the trade. Now you can see that using the same thing. You have a sweep, you break on lower time frame. You see that this has structural liquidity, right? And boom, you have your sell. As easy as that. As easy Easy as that. Same thing every day, right? The same thing. Look at how you would have, ping pong there, taking a sell, taking a buy at the same time, right? All you need to do was just understand structure and liquidity. That's all. How you need to be profitable, you just understand structure and liquidity. That's all. Definitely, you definitely make mistakes as well. It's unavoidable. You cannot avoid that. You make mistakes, but your mistakes basically you should learn from your mistakes, right? This is why I'm not really scared of losses, right? You should always, matter of fact, you will even learn from your mistakes faster. So that brings us to the end of liquidity, right? So next week we'll piece everything together, everything. I'll explain other blocks, breaker blocks, and then every other thing you need to know to piece everything together to have a perfect trade setup, and you can start making your own money of trading. I hope I've been clear. Clearly, I've actually shared too much knowledge for such amount of money, but it's for your own sake, right? So if you haven't been studying, it's left to you. But I've shared a rare gem, something people pay thousands of dollars to actually learn. Then yeah, for sure. I'm not disclosing everything. That's definitely very, 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 very normal for me not to disclose everything and all that. It's definitely normal. But trust me, what you already know right now, if you're serious, you'll make the market, right? There's actually a guy amongst you guys. He doesn't chat in the group. He just joins a Zoom call, and then I saw his results. Like he was trading static markets over the weekend. He actually studies during the day or so, during the week. Then the weekends he flips like step index and all this. And this guy he turned. Let me check. Was it not $20 or so that he has been able to turn to mad as profit, like crazy as profits, with this same knowledge that you guys all have here, with the same knowledge, the same knowledge. So that should bring us to the end of today's class. Um, yeah, see you guys again on Monday, and I hope you guys use the weekend to study, right? Study over the weekend for your own sake.